Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook. We start with most major currencies that were stuck to recent ranges ahead of US job report that is later on Friday. But sterling seized the spotlight and rallied to its highest in just over a week on expectations that British Prime Minister David Cameron's Conservative will stay in office. The Conservatives are set to govern Britain for another 5 years, although they may fall just short of holding an outright majority on the exit poll that show a result likely to trigger an in-out referendum on European Union membership within 2 years, while of course Scots could soon be pressing for independence again. An EU referendum would be the main longer-term focus. We have to wait and see what Cameron will say and then what kind of coalition government he will assemble. The pound is initially rising at the moment on the exit poll results, and of course the volatility is also likely to rise. Sterling jumped more than 1% on the day to 1.5435 after rising as high as 1.5448 earlier in the Asian session, pulling further away from a 5-week low of 1.4564 plumped in mid-April. In contrast, the dollar edged up, but trading was more subdued with investors reluctant to take big positions ahead of US non-farm payrolls data due later in the day. The euro fell about 0.3% on the day against the greenback to 1.1236, slipping from the previous session's 2-month high of 1.1392. Dollar bulls took comfort from the data on Thursday showing the numbers of Americans filing new claims for unemployment benefits held near a 15-year low that was last week. The data helped boost the expectations for a relatively strong employment report. Economists are forecasting non-farm payrolls to increase by 224,000 in April after gaining 126,000 in March when bad weather held back hiring. We're looking at the Australian dollar at the moment. It's skidded after a quarterly statement of monetary policy from Australia's central bank gave no clear indication on interest rates and, of course, said weakness in business investment meant the economy would continue to grow at a below-average pace for longer than expected just a few months ago. As we were also looking at the Aussie, it shed about 0.3% to 0.7878 after the Reserve Bank of Australia trimmed its inflation and growth forecast, while also highlighting green shots in the economy. At its May 5 meeting, the RBA cut its cash rate to a record low 2% as expected. The dollar bought 119.92 yen, about 0.2% up. In the commodities sector, gold slid for a third straight session on Friday's equities, and the dollar firmed after sharp losses, while of course traders awaited US non-farm payrolls data to gauge the strength of the economy and its impact on the Federal Reserve's interest rate policy. Gold slid also for this straight third session, while of course the sharp losses were affirmed, while traders we're not only looking at the non-farm payrolls, but also at the unemployment rate. We're looking at a strong data that could prompt the Fed to rise rates soon, and of course a move that would hurt demand for non-interest paying bullion. Gold prices could take a further hit from a strong report. Analysts expect non-farm payrolls to increase one more time by 224,000 in April after a meager 126,000 increase in the prior month. The possibility of a strong job report was also reinforced by Thursday's data on weekly claims for unemployment benefits, which held near 15-year low last week, in a sign that the labor market was strengthening. We're looking at crude oil at the moment falling on Friday, erasing gains earlier in the session as concerns over the oversupply weighed stronger than Chinese import figures. US crude was 22 cents lower at $58.78 a barrel, and of course already tumbled 3% on Thursday as a resurgent dollar erased gains from the past two sessions. Also, after some US producers were also mentioning that they would ramp up drilling after months of falling activity if prices continue to rise. And of course, for the long-awaited moment, the calendar today, we're looking at 8:30 US trade balance and the 12:30 non-farm payrolls and unemployment rate for US. That's a lot. That's a lot of important news today. Keep an eye on the calendar, and we will see you next time. Thanks a lot for watching. Bye-bye.